Hey everyone, hope you're doing well. So this is our first exclusive Chart Guys and Nuggets News Australia video. It's like we're both in secret clubs and we've got friends in another secret club. But I'm just going to be talking about fundamentals and technicals, the differences, and where I stand in regards to all of that, as well as some of my experience, some of my thoughts going forward, how I'm going to be looking to play this space into the end of 2018, 2019, and just some general thoughts overall to get the ball rolling. So starting it off, this is my analysis spectrum chart. And I certainly don't want to speak for Alex here. This is me assuming where he would be on the spectrum. But if we've got fundamentals and technicals, obviously a blend of both is ideal. But it's not the same for everybody. Everybody's going to have differences in regards to their lifestyle and how much time they put in and where their goal horizon is, looking out 10 years or looking out 10 months. It's a completely different scenario. So there is no one size fits all. For me, I'm definitely a lot more technical, but I do have fundamentals as a part of my analysis. For example, I'm interested in the Canadian marijuana space because of the fundamentals there, and then I use the technicals for the vast majority of my trading decisions, but the reason I am in that sector has a fundamental basis. Same thing with Ethereum. The first time I bought Ethereum in May 2017, it was because of the fundamentals behind it. Then I look at the chart and see blue sky breakouts and I was all over it. So we certainly know Alex is more so on the fundamental side, but he certainly uses technicals in terms of timing some of those entries and exits and knowing when good times to get some of his favorite fundamental coins are. But as far as I am concerned, hype plus emotion is always far, far more significant than the fundamentals in the short term. So because I'm a short-term trader and I have a short-term mindset, hype and emotion is always what I'm going to be paying more attention to. And the way that I see that is depicted on the chart. And the exact opposite for long-term. Fundamentals absolutely is more important than hype and emotion, which wear off and go through cycles in the long term. So if you're looking long-term, fundamentals are more important. And long-term for me is looking out multiple years to a decade plus. So that's something, an important distinction to make, because again, there's no one is better than the other. There are so many different factors and variables that determine which you use more. And, you know, someone over here on the technical side where I'm at can be better than 95% of the people on the fundamental side. And someone here on the fundamentals can be better than 95% of the people over here on the technicals. So again, it is a big difference, and there's no right or wrong answer is the bottom line. So the most important thing is to establish your goals. And with that, you're going to be able to hone in a little bit more on setting your path on once you know your goal, getting your path and walking on that path towards that goal. And I do that a lot with positive visualization. I'm a big believer in that in terms of having a positive mindset and envisioning what I want my reality to be. I did that with Ethereum in a hot tub before the breakout happened back in May, and said, I'd like to get enough money to buy a house. And that would be sweet if Ethereum could do that. And then Ethereum exploded and it went really well. But the point is, have a goal, and that helps you shape what your trading style is. So do you want to pay for a vacation? That's obviously shorter term. That's a smaller goal. Or do you want to quit your job and retire early? That's a huge goal that has a long-term mindset to it. And that, again, is going to determine what you do. And there's also a blend where I can be, you know, right now, the Chart Guys have been receiving payments in cryptocurrency for our courses and our alert system for a year at this point. And we haven't sold one speck of that cryptocurrency, and we're counting it as zero. So worst case scenario, we already are accounting for it as zero. Best case scenario, we are going to be sitting on a decent little pile when we do get some bullish action. So I have that long-term position that we're not touching, and I also have a short-term trading position that I'm touching very often and moving in and out quickly. Lifestyle is a very big, important factor in establishing your goals. I am well aware that I personally spend as much time on charts and trading that a lot of people cannot really commit to that. And that's because of their lifestyle. They've got a family, they've got a job, or they've got their sanity that they want to keep. For me, I'm on the computer, 8 or 10 hours, constantly updating my strategy, making multiple trades. And of course, back when things were going crazy over 2017 summer, I was literally established my life around trading. I would not leave the house a whole lot. Fortunately, a lot of people were coming to the house and we had a community space, so I didn't go insane and become the hermit living up in the mountains. But it is very important to, again, establish your goals to be able to establish what trading style best works for you. And for some people, that's just buy and hold and don't touch it. And that's because time is not a significant commodity that you have a lot to be spending, and that a lot of people are obviously in that situation right now. So time and lifestyle, very important to calculate, and you can put this all down on paper and help you visualize your roadmap of where you are trying to go. I always love writing things down. I think that it helps a lot for me personally. So my experience and my style, I've been trading stocks for 8 years. I've been trading cryptocurrency for 15 months. What I do is I find hype markets and I play them extremely aggressively when I see these boom bust cycles materialize. And because I have traded them before, I have much better success in trading them now, meaning you need to be battle hardened. We got a guy here in a foxhole, and the more battles that you see, the more comfortable you are and the more used to the game that you become. So I did really well in this crypto cycle, and I did not get back much profit at all. I didn't get back any profit from the run up to the all-time highs. And the reason for that is because I have seen this all before. So what I do is I go very aggressive when USMJ 2013, 2014, Canadian MJ 2016, 2017, and now 2018. These are just boom speculative markets that have a lot of attention, a lot of emotion. And when I see them doing their thing, I play extremely aggressively. I'm going all in on my positions and I'm locking in that profit, knowing that it's not going to last, knowing that we will pull back significant amounts. Once that hype and emotion, that short-term driver, once those wear out, we're going to pull back. So that's when I take my foot and I put on the brakes. So you have to know when to go really aggressive and when to go really conservative as a trader. If I were trading the same amount of times and the same, aggressiveness that I were doing in the summer of 2017, I would have given back the vast majority of my profits to this point. It's knowing when the markets change, and recognizing trends is a big part of that. But that's what helps me keep my profit. So if you are looking to be a trader, it's very important to recognize situations and environments that favor aggression and playing a lot and trading a lot and using bigger amounts of your capital and more, I should say, even I was going all in pretty much every trade in May, and that was compounding profits. And again, I was taking the most aggressive strategy that I possibly could. But it's the important thing of knowing when to stop that and to take a step back and take a deep breath and let the market find itself for a while, which we've obviously been seeing cryptocurrency do for the last 6+ months. And then we are able to be ready to strike the next opportunity with a significant amount of capital because we haven't given a lot of that back. So my goal as a trader is to be one step ahead every day. If I have more money than yesterday, my goal is accomplished, and that's all I'm trying to do. And so I don't like my account riding the wave of going up a certain percent and then going down a certain percent. Once I have that money, I want that to be my money and I want to lock it in. So that's why I'm not as much of a long-term kind of investor, because again, I cannot count that money because it's not real. Until you hit that sell button, it's not real, as we have certainly found out in the past 8 months. I definitely want to not be subject to all those waves of what accounts do longer term, which is why I am a shorter term trader. Education plus experience equals confidence. That's the most important thing that we can gain as traders and investors. Once we have that confidence, it is a complete game changer to know that you can, profit in all kinds of market environments, in all kinds of sectors. It really takes a whole burden of stress off your back in terms of, financially planning your future. And obviously, again, now that everybody here has experienced, or most people here have experienced, the huge bull run and the huge bust, we're going to be able to recognize that the next time it does come around. So the market itself gets a little bit smarter and more experienced, and that does obviously help us in the long run. Like I said, if that was my first major market in 2017, seeing all this action happen, I would have given back so much more money. I shudder to even think about it. It was, again, only because I already did that. I gave back a ton of money on the first time I ever did this back in 2013, 2014, because I expected those runs to continue. And I still have a couple USMJ penny stocks that I have as a tax write-off ready and waiting from when I was hoping to see that run never end. So my game plan for 2018, the rest of 2018 and into 2019, I personally am only trading the cryptocurrency space bullish because I am on Coinbase. The reason that I'm using Coinbase is because of security reasons, as well as, the ability, how I can trust my capital on these exchanges. I'm not going to be putting a significant amount of my net worth on these exchanges. You guys that are doing the long-term fundamentals, you've got your cold wallets. That's an extra layer of security, of course. But as a trader, as a short-term trader, I don't have that. So I use my capital sizes to reflect that. So what I'm going to do is trade swing positions. When we change the weekly trend bullish on Bitcoin, I'm going to take swing positions in my cryptocurrency accounts, and I'm going to day trade on my stock accounts, which have much more capital, and I'm going to not swing on my stock accounts because my hands will be tied. CXBTF is the new ETN for BTC, and I'm really liking the way that it trades right now. So I will be day trading that with significant capital, but again, I'm not going to hold overnight because that's putting me at a huge disadvantage. If Bitcoin can trade for 15, 16 hours and my hands are going to be tied in those positions, that's just a huge disadvantage. You should be trading on an exchange where you have access 24 hours if you're going to be doing that. So only day trading over there, but that's going to allow me to play with more capital once this trend change does occur. And I say once it occurs because it will occur. It's just a matter of when. We're going to get a lot of information late September, early October with what momentum is going to be for the rest of 2018, depending on how this weekly pattern breaks on Bitcoin. But I will have all that capital in play without having to put it all on an exchange. So again, that's why, I'm talking about the ETF, and that's why so many people are interested in ETF, because it does. I'm just one individual, and I can see how clearly it would open up my capital to be playing in the cryptocurrency space, and I know it would be the same for millions of other people. So that is my plan moving forward, and I'm going to take it one day at a time, as I always do. I will have my game plan established, and I will stick to that game plan and make sure that I have stop levels in place on whatever I look to do. And at this point, it's looking like that I will be buying into a bull break if and when that does occur. And we're looking to set a weekly lower high on the, might as well pull it up right now, Bitcoin chart. So we've seen this plenty of times, especially if you watch the videos. But we're looking to set a weekly lower high, more likely than not. And if we do, we're going to see a tightening range heading into the start of Q4 2018. So once we get that break, if we break the lower highs, I would absolutely, mark it by a swing position, because I wouldn't be able to live with myself if I didn't make a chance, or try, I should say, at that eventual trend change. And even if it does pull back and I end up taking a loss on that trade, that's perfectly fine for me. But I'm not going to. I have to expose myself to that potential opportunity, because once we do break resistance, I do believe that we are going to see significant follow through on this weekly chart, and a trend change that pretty much the entire market is going to recognize. So if we get a bear break, I'm going to sit tight. Like I said, I am not trading this space bearish. Bears are going to have a huge opportunity if we break bearish, and we're going to see, a significant move to the downside. Whether it's down to 5,000 or 4,000, I have no idea. But all I know is that's going to make me significantly more patient for any of my trading game plans going forward until we get a clear weekly trend change. And again, the entire market, we have such a good cryptocurrency community and so many people putting out videos and content that I know that once we do change this weekly trend, it's all anybody's ever going to be talking about for a significant amount of time. And it is going to significantly shift the sentiment of the space to a bullish environment. And the more clear that trend changes, the more people are going to be talking about it, and the more the market will have consensus that the trend has changed and the bulls are now back in control of the weekly time frame. So it's going to be very exciting in Q4 2018. Whether it's exciting for the bulls or the bears, I don't know, but I do know that it will be clear when that break does occur. So keep tuning in. I know Nugget will be all over it, Alex, and so will I. And we will see you around. Have a great rest of your weekend.